Hi everyone, this is week 11 of the macro overview series, and this video will cover the major macroeconomic news in the EMEA and Americas region, and majority of the news in the Americas region is from the US. So I'd like to kick things off with the Americas. So first I'd like to talk about the economic situation in US and how the US stocks have been negatively affected after the chair of the Federal Reserve, Mr. J. Powell, had made some interest rate comments which were hawkish. So he warned that the central bank could aggressively increase interest rates if the economy grows too quickly. So these comments saw the S&P 500 fall by 1.5%. The yield on the 2-year US Treasury increased by 5%, and Nasdaq also fell by 1.2%. So, like I said, all this happened after the hawkish interest rate comments by Jay Powell, and an increase of 0.5% has already pushed the interest rate higher, and this has caused an increase in the mortgage and borrowing rates. And this is also accompanied by a fall in government bond prices. Uh, Moreover, the confidence could have been further affected uh, because of news such as JP Morgan analysts reporting that a recession could occur, and there's a 70% chance of a recession occurring in 2023 and 2024. And this shows a negative economic outlook, and this can further discourage investment. Now I'd like to move on to once again the economic situation in US, and despite the fact that the US stocks were negatively affected because of the comments made by the Federal Reserve Chair, employment still increased, and the US recorded an addition of 311,000 jobs last month. And unemployment rate remained close to its 50-year low of 3.6%. Uh, this was primarily this increase in jobs uh, was primarily due to people returning into the workforce. So the labor force participation rate uh, rose to 62.5%. And however, like I said, 311,000 jobs were added in February, but this is still low compared to the 504,000 jobs in January. And but this comes at a time when the Fed is signaling aggressive interest rate hikes in order to stabilize the economy and control inflation, which is currently at 6.4%, and this is still way above the Fed's target of 2%. So uh, the fact that the US recorded an addition of 311,000 jobs last month has been beneficial for the economy and helped increase economic growth. I would now like to move on to the Europe, Middle East, and Africa region. So first, I'd like to talk about EU and US and how they've begun new talks on trade in critical minerals. Uh, so they have launched new talks on critical minerals trade in the green technology race. Uh, and EU officials hope that this trade on critical minerals, will provide access to the US's green subsidies. And EU officials also hope that a loose deal around critical minerals could provide a free trade status and also allow products from Europe to qualify for the subsidies. So essentially, they plan to launch a dialogue to boost transparency around subsidies for clean energy. Lastly, in the EMEA region, I'd like to talk about the economic situation in UK. An influential group of City of London chief executives have recommended to Jeremy Hunt to enact reforms which are focused on releasing investor capital to support the companies in UK and boost the UK economy as a result. So by deploying long-term UK pension capital into the economy, it can deliver better returns for savers and hence lead to faster growth for the country and benefit the economy as a result. Moreover, an asset management firm called Schroders has also suggested that Hunt should consider tax exemptions to incentivize domestic investment. Thank you guys for watching this brief overview of the major macroeconomic news in the past week in the Americas and EMEA region. I hope you all enjoyed it and learned a little bit as well. And I will now see you all next week.